Welcome back to Behind the Checkout, the podcast where we explore the ideas and innovation shaping the future of payments. I'm John Lunn, COO and co-founder of Gravy. If you enjoy this podcast, please remember to subscribe. Today, we're asking a big question. What's next for payments? From AI to open banking and global real-time rails, the payments landscape has never evolved faster. But as technology pushes boundaries, we're building a smarter, more connected ecosystem. Or are we just adding layers of complexity? To explore this, I'm joined by Davide, manager at Edgar Dunn & Company, who advises leading financial institutions and merchants on payment strategy and transformation. Davide, it's great to have you on the show.
It's a pleasure to be here, John. Looking forward to an interesting conversation.
Cool. Well, let's, again, like to get deep into it. Let's start with a hard question. When you look at today's payment ecosystem, what excites you the most and what worries you?
Yeah, so I think there are a couple of things that are really exciting in the payment ecosystem today. And I think the first is that payments is more and more becoming a strategic consideration for a lot of businesses that are trying to accelerate rather than just being seen as a cost. We see a lot of merchants that are leveraging many PSP connections, acquirers to optimize acceptance, reduce costs, and personalize the checkout experience. As you mentioned, there are a lot of new infrastructure rails that are enabling alternative ways of transferring funds and also enabling new business models. You mentioned RTP, there's also account funding transactions. There are many new types of wallets emerging, as well as stablecoins. We're also seeing a lot of embedded finance happening. That's a recurring theme in the work that we do, offering embedded payments, embedded issuing, embedded loans, all those sort of things that creates new value for a lot of especially the software companies. And finally, and I know it's going to come up at some point, so let's get it out of the way, but agentic commerce is obviously very exciting. There's a lot of hype around it, and I think it's important to really understand what it is and how it's actually going to impact the world of payments. And finally, in terms of what worries me, you mentioned it earlier as well. There's a lot of complexity, even though merchants are becoming more sophisticated in their understanding of payments. But still, there's a lot of um, complexity when you look at all the alternative payment methods, the risk tools that are available, compliance requirements, when you expand into new geographies, when you add new layers. And many merchants we're seeing that don't have big engineering teams are struggling to manage all this complexity. And so that's kind of the main worry that I see, is that ideas are good, but the implementation is becoming hard to a certain extent, or costly.
Well, we might have an answer for that, but we'll move on from that. Um, how have the last 2 years redefined what innovation means in payments? I think there was a big movement in payments towards doing anything that's not credit cards. And I feel like that's almost changed a bit. But so how do we redefine innovation in payments?
It's a really interesting question, because within Edgar Dunn, we publish a yearly report which looks at, what it's new in payments. And this question made me go back to what we published 2 years ago to see, okay, what were we talking about 2 years ago? And it's really interesting. We're talking about we were coming off of, the pandemic that had boosted certain types of businesses. We're talking about um, fintechs emerging and looking to boost operational efficiencies. We're looking at climate and impact fintechs that were trying to shed light on sustainability within the financial landscape. And that's something that we don't see as much anymore. We were talking about AI, but ChatGPT had just came out. It was still relatively new, so it was still what is generative AI could it mean for the payments industry? Well, today, we have a better understanding of AI, what it means for transforming today's businesses and operations using technology and AI, using orchestration from rules to autonomy. Buy now, pay later has grown significantly. So we're talking a lot about that, about biometrics, digital identity. And then there's more applications actually being of these new technologies such as connected cars, insurtech, payments in virtual economies, stable coins. So a lot has actually changed over the last few years.
So it's kind of a following question a little bit, and let's put agentic on the side because that's too obvious an answer. But what are your clients asking you about right now that they've not been asking you before? What's top of mind for them?
Yeah, um, they're asking some of the same root topics, such as how do I have better visibility on my costs and profitability? So, and as I said, merchants are a bit better understanding scheme fees, cross-border fees, frauds, disputes, but they're still wanting to know more about how can I reduce the impact of interchange and look at downgrades. How am I better managing disputes and fighting chargebacks that I deemed to be friendly fraud and not legitimate disputes? How do I reduce my operational overhead? And in our view, there's a lot of margin pressure globally and rising fees, and so merchants are trying to optimize as much as possible. And then they're asking us about what kind of KPIs should I be evaluating as a performance metric. So we're saying authorization rates, latency, false declines. They're becoming topics that are not as much ingrained within pure payments team, but also they're looked at actually at the board level. There are metrics that have evolved and expanded within merchants. And then also, as always, operational efficiency and automation. So we get this a lot. How can I use automation to fight disputes? How can I use AI to create responses to chargebacks? How can I use AI to reconcile payments and review all these processes? How can I automate as much as I can? Those are what we're getting more and more compared to the last few years. And then, as you mentioned, agentic commerce, everyone is asking about that.
So the next question is really about consolidation and fragmentation. So think back 2, 3 years. It was all about alternatives to credit cards, right? And I think, the open banking stroke, real time payments was going to change everything, and buy now, pay later was going to disrupt borrowing widely, and et cetera, et cetera. So there was a lot of sort of fragmentation, I would call it, or new things coming in to compete with the standard card rails. Yeah, it feels a little bit like that's gone backwards to me, right? Backwards or not changed, right? I think the card company, when I think about, to me, outside agentic and AI were the two most exciting things that have happened in payments as of last year. I would say one of them is probably Visa, MasterCard, Amex getting together to create Click to Pay, which I think is an exciting innovation in tokenization. Everything comes there. And then the second thing is the banks coming together to build pays, right? That seems to be the biggest changes, both being driven by old school financial institutions, not by startups. So where do you see that? Do you feel like it's getting concentrated, or do you feel like we still in a world where new payment options, payment methods going to be coming from the startup sort of rapidly growing tech environment?
Yeah, it's a very interesting point because I think both are happening. There is both consolidation and fragmentation, but it's at different layers within the payments ecosystem. I think that what you bring up, click to pay, and pays, actually are an example of more fragmentation at the consumer layer. In Europe, there's also Wero that came out that tries to consolidate more of these domestic wallets. It's just an example that there's more consumer choice. Consumer at the checkout has more choice than before, and pays and click to pay are at the end of the day hard centric solutions. But we're seeing that there are more um, countries that are trying to focus away from relying on Visa, MasterCard, and they're pushing for more domestic solutions. So there are more domestic schemes that are currently being developed in certain markets. There are more RTP schemes that are being launched. UPI was obviously a big success in the mid 2010s, but Pix, there's also Breve in Colombia. There's a lot of innovation in those spaces. So I think at the consumer level, there's a lot of options. But at the end of the other side, on the merchant side, there's more willingness to consolidate. They want to have more, they want to diversify payment processors, but they also don't want to manage all these individual relationships to accept all the options that consumers have. And so I think there's a willingness to consolidate at the merchant level, to have unified reporting, to manage risk from a single point rather than to have different risk um, criteria across different countries, across different payment methods, and so on. So to answer your question, I think there's both happening. It's very exciting to see that.
But I think also, I mean, you look at the markets where the real-time payment infrastructure has taken off, the sort of UPI in India, Pix in Brazil, Bebe, et cetera. They've all sort of happened in markets where credit cards went to start with. So, whereas they haven't really succeeded in markets where credit cards were strong. So I think the UK for me, I think that the real-time payments, open banking experiment has had mixed results in my opinion, right? I think it's been very successful in opening up the banking environment, but not great in doing much for payments, particularly, I mean, apart from areas like bill payments, then areas where, credit cards are having struggles like, unfortunately, not suitable for work type stuff. But I think the markets where they have taken off, there wasn't really a strong penetration of credit cards. So I wonder if we're just, it's getting more fragmented geographically rather than more fragmented technically.
Yeah, absolutely. And not just that about, the fact that cards weren't as prevalent in those markets, but also these new solutions were more mandated from the regulators, mandated on the banks. They provided, their cheaper solutions than cards to accept. So the fact that they were mandated from the local authorities meant that there was more readiness and adoption compared to, as you said, in the US, for example, FedNow hasn't had that same level of adoption, partly because it's been left to the market and the cards have a good incentive ecosystem for everyone to keep using cards rather than adopt something that kind of disrupts that model.
Yeah, we're also lazy by nature, aren't we? If something's easy, we're not going to change if there's no real driver to change.
That's yeah.
Outside agentic, AI and automation is, reshaping how merchants and consumers experience payment, is reshaping how fraudsters attack merchants, right? So how are you seeing AI and automation reshaping payments generally?
Yeah, aside from agentic commerce, which I don't think is necessarily gonna affect too much how we actually pay the payment experience itself, but AI and automation in particular is how we're really gonna see impacts to the payment experience. And I think AI and automation are just gonna make everything a little bit more efficient over time. If we look at it from a consumer side, you may see fewer card declines. There may be smarter authorization models for more invisible payments happening, more personalized payment options. So overall, reducing friction for consumers to pay. But it's not going to be an overhaul of how we pay today. While from the merchant side, um, you know, as I mentioned, better responses to disputes and chargebacks using AI, optimizing fraud models. Machine learning is getting better and better. Seamless reconciliation, and as well as um, issuer specific routing decisions based on AI learning, and being able to read certain metrics that perhaps before was harder to understand.
Absolutely. But of course, on the other side, this is making it a lot easier to be a fraudster, right? I think someone was saying, like one of our other guests, as was said that even a 5-year-old could use a card testing tool now. So I think it's also, unfortunately, with anti-fraud and payments, it's an arms race, and we've now got a new nuclear bomb, as it were. So, well, but um, So what's the big unlock when it comes to cross-border? It's an area of frustration for a lot of merchants, the price of cross-border payments. Let's leave tariffs on the side. Let's not talk about those, but just cross-border payments themselves. Are stablecoins the big unlock? Is that what's going to happen here?
Yeah, I think stablecoin is one of the, let's call these big opportunities. I do think, you know, interlinking RTP systems is a big opportunity. This is happening primarily in Southeast Asia. There have been some pilots with Singapore, Thailand, Philippines. They're all Vocalink systems, the Mastercard solution, which makes it easier to connect and for the settlement because there's obviously going to be risk somewhere with instant payments. And so the fact that it's all on Vocalink helps that a lot. So that's a big opportunity for cross-border commerce to have an instant payment solution that is connected between markets. And, I'm not sure what the fees would be, but theoretically they are very low cost payment solutions. Another exciting opportunity in cross-border is portable digital identity and tokenization. So using my proxy for a certain RTP or solution and being able to use that elsewhere in a different market to make a payment. That's very, very exciting. I think it's very early stage still. And then, as you mentioned, stable coins. Obviously, it's a big opportunity, particularly in managing treasury operations. The big example from a few months ago, or maybe even a year ago now, is SpaceX using stable coins for payments, to accept payments for Starlink in different countries, specifically in Latin America, and then just be able to move funds from stable coins to USD and managing operations basically in stable coins. So that is very interesting, and we'll see if more businesses that operate internationally are going to start accepting that model. But that's definitely a big opportunity.
Interesting. So do you see, I mean, they had particular reasons. Some of the markets they worked in perhaps had quite volatile currencies and exchange rates. Do you see more of this happening?
Yeah, I mean, volatile currencies for sure. The exchange rates not being ideal, and instead just having an on ramp fee, and then keeping potentially even the funds in um, stable coin currency, and then off ramping as you need it. You don't even need to convert it into USD. You can keep it in stable coin, and then depending on whether you have expenses in certain markets, off ramp directly from stablecoin to the local currency where you need it to. So I think it's cutting out an area of friction, of uncertainty, of potential risk, and so just to keep the process more streamlined.
Regulators. So regulators, everybody likes to say regulators hinder innovation. I totally disagree. I believe regulators have a job to protect consumers from us crazy tech people trying to do everything. But they're adding new frameworks. So we've obviously got PSD3 coming now. We've got sort of the VAMP thing coming from Visa. We've got other sort of new rules, regulations. I wouldn't say it's just regulation, but new regulations coming into places. Are they hindering innovation, or are they just, giving us new challenges and making us think harder?
I think they're both helping and hindering innovation. Frameworks like PSD3, FedNow, VAMP, they are trying to foster innovation by providing a secure and efficient, as well as a level playing field for companies. But at the same time, as you mentioned, it does provide increased compliance costs. It provides restrictions. It provides complexity. I mean, VAMP. I hadn't thought of VAMP when thinking of regulators, but VAMP is providing a lot of headaches for a lot of businesses. So definitely, I understand why Visa is doing it, but at the same time, it's been, a lot of questions coming our way on what does VAMP mean? How should I prepare for it? What are my ratios that I need to look at now? So there's a lot of confusion, especially for smaller firms. So they regulators do have a job of helping, and PSD3 is, in my view, a good framework to provide a level playing field for a lot of businesses, but they are providing also complexity. So it's kind of a hard line to play between trying to help and avoid hindering.
Yeah. Yeah. I think we have to remember who they're there to protect, and it's definitely not our bottom lines, right? So, it's right. Yeah, it's interesting. Card networks, are they evolving fast enough, do you think, to keep themselves relevant, or do you think eventually they'll be eaten by everything else?
I don't think they're going to be eaten. I think the networks are so well entrenched in what they build and in the relationships they have, and they are evolving. Expectations are very high, of course, and innovation is perhaps going faster than the card networks are moving. But they've made some strong progress in the past. Tokenization, identity security, data services, all those things, they kept on innovating and investing in them as well. Um, they are, they've providing services for agentic commerce. Visa, Mastercard were amongst the early ones to provide solutions for them. So they are playing a role in agentic commerce, even though you could argue they're also slowing it down by delaying or struggling to provide a solution for network agentic tokenization, um, and also stable coins, which you could argue is a threat to the card networks. But both Visa and Mastercard have provided and are investing in stable coins. They're looking into it, so I don't think they're going to be marginalized in a future payment ecosystem. They're, like it or not, they're here to stay. Even though there is competition from instant, low cost, push based payment ecosystem that are leveraging bank to bank rails, they're still here. So I don't think card networks are gonna go away.
Yeah, I mean, I think we have had Hans Morris from Nike, who was former president of Visa, on the podcast, and he was basically saying actually cash is the main target for these alternate payment types, not the card networks, and it's not really affect the card networks that much. Which is interesting to know. I mean, they've been running for years. They still work, and they work pretty well. So I think there are other more inefficient things to go after.
I mean, I definitely agree, and the card networks are playing in every kind of use case you could think of that involves payments in domestic, consumer, P2P, B2B, cross border. So they're everywhere. And you could argue that yes, there are additional companies coming in, solutions coming in that are trying to take a little bit of share, and some more successfully than others, but it's not going to be eroding away at everything the card networks are doing.
Yeah, I agree. All right, so we always like to ask the crystal ball question here at the end. So, like, predicting the future is a dangerous game, but we like to do it. So, make one prediction about how people will be paying in 2030.
It's a yes, as you said, dangerous question. Likely to get it wrong. If I take try and take a logical approach to it. If I think about 5 years ago versus now, there's been a lot of innovation, but in terms of how we pay, you could argue it hasn't changed that much. It is more mobile centric than before, but it hasn't changed too much in terms of the form factors. So if I had to make a prediction by 2030, I would argue that we're still going to be, paying with cards, mobile, but the payment is going to become more invisible than before. So it's going to become more embedded within the experience. Looking at Uber, you'll have the option to choose between card, bank transfer, wallet, but it will be embedded more within the actual like experience, the journey of the consumer, of the shopper. So yeah, that is perhaps a conservative prediction of how we'll pay in 2030.
Got it. Well, really appreciate your time today, Davide, and thank you for coming on the podcast. As per usual, if people have got questions, we're happy to forward them on to Davide, or answer them ourselves. Either way. But thank you once again. Thanks for spending time with us, and look forward to seeing you at the next event.
Thank you.